Good morning, traders, and this is your Dow Jones day trade setup for today. So today we have the jobs number coming out, so expect some volatility and probably nothing much going into the jobs number. So in other words, expect some sideways motion, unless there's some other political noise that comes out at the moment. So just looking at the daily trend is clearly to the upside. We have broken above the previous high. Okay, and right now we've got the second day of a new high. So we've got an all-time high yesterday, and right now we've got an all-time high as well. So trend is clearly to the upside. We should be looking for longs, and any pullback is worthwhile of buying right now. So we start just drilling down through the bigger time frames. Just tidy up the noise. You can see we're in a pretty well-defined channel here. Okay, so we're running in a fairly well-defined channel. Oscillators indicating that we should be looking for a pullback that should be coming. Wouldn't surprise me. Could be as little as to the bottom of the channel. Alternatively, with the jobs number, it could be a little bit deeper than that. This double bottom here, which it's a low double bottom, but it is still a double bottom, that has a measured move pretty much up to there. Okay, and the other thing about this is you could argue that this whole thing was a channel, a range which we've broken through, so you'd expect the range height, and you can take a range height from there or you can take it from there. There's a previous high there. Okay, so anyway, that's the scenario we see at the moment. Just want to see the weekly to see if we have a pause bar here, and then we've got a pretty big engulfing bar, which could also be an exhaustion bar. And looking at all the oscillators, it is possible. Anyway, right now we are looking for longs. Obviously not looking for longs right at the high. We want to see a pullback and then get the long. But as you can see yesterday, you didn't get much opportunity to get a pullback. And I don't think there was much on offer. Well, there was 140 points on offer at the moment. So I suspect the same thing's going to happen. So if you, let's get rid of all the noise, you can see we're clearly above the moving averages at the moment. We are trending to the upside, so any bounce off this moving average is what you want to be buying. So if we come back down to the 12 minutes, and you can see the real opportunity was yesterday morning. There you sort of had from a Bill Williams strategy, got this pin bar here below them in deviation from the moving averages. So wise man number one, same concept, which gave you the long, and then we had this sideways motion during the European session before buyers stepped in, and then going into the close, the buyers continued buying. Okay, so a bit messy yesterday, but definitely there was an opportunity right here, and I don't think that was at a time when we were awake for 5 o'clock, 5 o'clock in the morning South African time, so kind of difficult to pick up if you weren't watching that point. Anyway, so I think for today, jobs number, so I'd be a little bit cautious of what's forming at the moment. What we have here is either a double top or a flag, or alternatively just a range. So a break above gives us a long, a break below gives us a short. I'm not interested in that short though. Okay, so we just come across here to the hour, you'll see any breakdown would still be above the moving averages. Even if it broke as far as that, I'd still be above the 21 moving average. Okay, so any pullback and positive price action in any of these zones is another buying opportunity. So you've got 28994, and you've also got 28937. Okay, so those are the two levels I'd be watching for a little bit of a pullback to get back in long. But this trend is very strong to the upside, and I highly doubt that the jobs numbers are going to come out favouring the bears at the moment. Anyway, if we quickly have a look at the Ichimoku, I think this should start giving us some indication now of what's going on. Okay, so yesterday you can see from a 12-minute perspective, there was your entry off the cloud. Bit of a warning because you were bearish, and then we turned bullish. And then we didn't really turn bearish. Again, we come together and we bounced off the cloud again, which probably, in all fairness, should have been your second entry for the day. And there's your third entry for the day. And we are currently bullish, so there's no reason to be getting out of this moment. Okay, half hour we are bullish, except for Keys and Tigers, which are far apart, so that's a bit of a warning. And we've got some gaps to the downside, plus we've got some levels to come and tag. So there is possibility for a bit of a pullback, but I'm not going to trade that. If you look at the hour, that is a pretty well-defined uptrend, and we're very close to Keys and Tigers, and Keys and Tigers are close to each other. I mean, they're closer than they were here. So that's a pretty solid trend. Look at the size of the cloud. That's an indication of the support to the back should we fall down. Well, back to the left. And I suppose the most logical level of support would be this one here. 28,784. Okay. So we know how volatile the jobs number can be. So if we do get such a rapid move to the downside of the jobs number, take bias is down there. Keys and things are pointing up, so really wouldn't be too surprised to see either just a gentle grind back continuation to the upside, or alternatively a bit of sideways. But at this stage, it's looking like we're just going to continue grinding to the upside. Okay, this current trend here, the last couple of hours, has been very, very strong. And then looking at the daily. So the daily is extremely bullish. There's absolutely no reason, if you've been sitting long for a while, pretty much from here, there's still no reason to get out of that long. But the oscillators are warning that we're coming up to some kind of a, how do I put it, we should be looking for some kind of a pullback. But I think we're gonna grind a little bit further this week, and we'll probably find that this bar is going to close on its high this week. And if that's the case, it could be seen as an exhaustion bar, or it could just continue for another week or two. There are some warning bells all over the place that we need to be seeing some kind of pullback, but I don't think it's going to happen right now. Okay, the other scenario that could play out is the jobs number could be really bad, and we could get some geopolitical noise come through, and that this ends up with a massive pin bar on the weekly, and that would be an indication of some serious downside to come. But I think for now, I don't say throw caution to the wind, but go with the trend, look for the opportunity to buy. I mean, if you look at the 12-minute at the moment, shoulder, head, shoulder, inverse head and shoulders, ready to break through this next level and give us another leg higher. That's what I'm looking for. I'm looking for longs, either on the breakouts or on the pullbacks. And the beauty about this one is it is a 30-point stop loss, which is fairly decent. Okay, anyway guys, that's it for me today. Looking for longs, would ideally like to see the pullbacks. If we do get the breakouts, I'll take the breakouts with a stop below this consolidation pattern here. Okay, anyway guys, that's it for me today. Hope it helps, and I'll catch you later. Cheers for now.